Hey guys, this is a VIX trade that's set up on December the 5th, 2011 on the Euro-US dollar pair. And this is actually the Friday, December the 2nd, and hit support, made this inside candle, started to rally. The thing that's really important here, the stock market was on a real tear, up over 100 points, the futures that is, and because this trade happened during the London session. Actually, the trade I think actually happened around 7 a.m. Eastern time. I didn't get this trade myself. I was just I'm still sleeping at that time where I live. But if I go to the 1 hour chart, what's happening here is that the price is rallying up, and we've broken the swing high right here. So we've got higher highs and higher lows. So we've got the market flow going up. You can see that the MACD was crossed above the signal line, and so we want to buy back to support. If you look left, where's support? It should be pretty obvious. I mean, if you look, if I put a line across, like, anywhere in here, does that make sense? You can put it up into this area so you get this. Look at them all. I mean, that's pretty good. Let me zoom this out a little bit. Wow, even back here, support. See all this in here? This is a good level. 134.20, 2. Anywhere from here up into this candle here up to 28, that's a zone, okay? These aren't exact, it's just a zone. So you want to put your order in around the 25 mark, something like that. However, before we do that, let's get rid of this and let's look at some Fibonacci levels. So we got a nice level of price support. Let's put some fibs in here. So we got a rally from this low up to this high, back down to this low, up to this high. Let's put in from here up to here. And we have a 62% comes to the same level, 134.22, the one that we just saw. Okay, maybe I should leave that on there. 134.20. I think it was at 23 we said. I'll just leave that in there just like that. Then if you measure from this low to the same high, well, it was very interesting because I did do the thing right. Hang on a second here. It was very interesting because from this low up to the high, the 38% fib was on top of the 62%. It was the same number. So we had overlapping fibs. See, from here up to this point, and from a lower low up to the same point, we have a 38% fib using the lower one up to the high, down to here. And then we have from this low up to the high, 62%. And we have really nice old lows and highs in here as a support resistance level. So you want to buy it in here at like I say, 134.25, that kind of a thing. And as a pair personnel, as a price level goes on this pair, that's a good level. The 20s and the 50s are good on the euro, and of course the figure. So there's the bounce. If you tried to get 20 or so, you would have missed the trade. That happens, so don't worry about it. As price goes up, where do you want to take your profits? You want to take your profits at, I like to go for these first extensions. For example, if we take this off, first of all, you can go for a classic A, 20 pip risk, 20 pip profit on half, 40 pip profit on the other half. You want to make sure you get profit off here. Okay, so that would be 134, let's call it 75, that kind of a thing. Also, by the way, if you measure from this high down to this low, let's just do that. Look where that comes to. The 62% fib level comes to the same place. That's a good place to take your profits. Okay, at least get the risk out of it and move your stop up big time. I'd say take your profits. That's I don't know, 50 pips. That's a good profit. There's a spike into it right there. Okay. Not only that, let's just point something else out here. Notice that the prices were going higher here, but look what the MACD was doing. What's this? Negative divergence, right? Goes down, breaks the neckline, comes back, rallies up. You want to sell 62 to 79%. So you could have definitely sold in this level here. You could have used a noble entry in here. It worked out actually very nicely. That was just another trade. And in any event, there's your trade for you. So you're buying at 25. You're getting out at like 20 pips for your first half, and then maybe your 50 pips on the other half up in this level here. And again, we have the market flow going up. We have the MACD crossed above its signal line down here. See? And that was a nice little setup. So that was on the Euro-US dollar. But I wanted to tell you too, this happened at 7 a.m. Eastern time. So those that want to know, we're just worrying about that. It was just before the news embargo was lifted before the New York session. Okay, and that was on the Euro-US dollar pair, December the 5th, 2011.